All righty, good evening, everybody. Welcome to our last TalkIQ for a spring 22 semester. Glad you could join us. I certainly appreciate the support we have had from participants and students in the past, those who can join us live and those who can certainly watch the recordings, given the fact you're all in the midst of kind of getting toward the tail end of the semester and busy with all the things you're busy with. It's my absolute pleasure and honor to have Mar with us from Pear VC as our last speaker for our Spring 22 TalkIQ, with a focus on fireside chats with amazing venture capitalists who all happen to be very accomplished women. So we have a conversation on venture investing, but also mental models, best practices in regard to career growth, and all the skill sets you need to develop in order to have a successful career, whether you're going to technology or business, finance, and certainly startups. As always, this event is PPIL approved, so please make sure to do all the checks and check-ins and all that to get credit. And as always, also we are going to have a book giveaway for best question asked. I always ask our speakers to recommend a book or two, and the two books that Mar mentioned, we're going to put them in the chat box in regard to the titles. One is the Hard Thing About Hard Things by Ben Horowitz, and the other one is Founders at Work by Jessica Livingston, co-founder of Y Combinator. This one is a bit of an oldie, but it's still a goodie. It brought memories back, Marvin, you recommended it. And lastly, for questions, please, we'll as always, take questions throughout. You're not going to wait until the end, so feel free to send us questions. I will interject and incorporate them in my conversation with Mar. So without further ado, let's dive right in. So Mar, first and foremost, thank you for giving up your valuable time and joining us virtually from sunny California. And in terms of background, we shared your bio with the attendees, but just quickly, Mar is a PhD in electrical engineering, co-founder of a number of startups, and now she's switched sides, and now she's a co-founder, managing partner of a venture firm out in California called Pear VC. She has a number of patents to her name, and she's a huge Barcelona fan as well. So I'll ask a couple of questions at the end. So Mar, thank you for joining us. I'm going to first start with a question in regard to the skill sets and the kind of a mindset that you had to develop as an entrepreneur that actually served you quite well in your role as an investor on the opposite side. And also skill sets that you had to develop from fresh, or you had to switch your mindset as you went from being an entrepreneur, an operator, and then becoming an actual investor.
Yes. Well, thank you for having me. I'm so excited to be here. I think this is the first event I do with Columbia. I'm so involved with so many schools, but this is my first one with Columbia. So I'm so excited
to involve you even more.
I'm very excited. So that's awesome. Maybe I'll clarify one thing, which is that it's true that I'm an investor, and I've been at Pear for 9 years, but I'm also the founder of Pear. So I feel like this is my 4th company. And when you start something, even if it's an investment fund, a lot of the same feelings or the same spaces in your mind are the same as when you're founding a startup, because it's your business and it's all you think about all the time. And you really can't go on vacation because you're just thinking about this business. So that's how I feel most of the time when we're building at Pear. I think in terms, I have the privilege of having been a founder before. So perhaps the thing that is most helpful to me when I talk to a founder is that I have a lot of empathy for them, because I see how hard it is to be a founder. It's just really, really, really hard. So I can tell somebody, I'm in I was in your shoes, and it's going to be okay. And sometimes most founders, that's all they need to keep going and do the next thing. And to answer your question, what is the skills that I have developed? I came from academia. So I was, I got my PhD in electrical engineering, and I actually interviewed for professor positions. I could have been a professor. You can't really A/B test your life, but at the very last minute, with even my offer signed, I said, okay, fine, I'll start this company. So I went this other route, right? And I think a lot of you that are in business school, or I don't know, undergrads, I don't know the audience, business school, most people that have spent most of their time in academia and in a great institution haven't had to deal with failure or with things that don't go right. They're just, or uncertainty. It's very clear in academia what you need to do to succeed. And if you're in a great institution, even for grad school, you probably were a really good student and know how to do well at school. But as soon as you become a founder or an investor, dealing with problems and failure, it's just a matter of, it just happens all the time, basically. And my mindset has changed into, I'm a problem solver. And when something doesn't go right, or when there's something wrong, whether it's your own company or whether it's a company in the portfolio, my mindset is always, I'm going to try to fix it, or I'm going to try to learn from this. And I think that's the biggest learning over the last, couple of decades since I left school, in terms of, the skill that I have developed the most, kind of this resilience that it's okay to pick up and keep going.
Well, you brought up a number of interesting points. I'd like to dig deeper into some of the more pertinent ones. One, the very fact that, contrary to common belief, or at least is not as well known in the East Coast as opposed to the West Coast, that a great number of companies, tech companies, have come out of academia. Everything from Google to Oracle to Akamai. These are companies that are based on academic research. And also there are, especially on the West Coast, if you look at the likes of Amp Lab or Rise Lab at Berkeley, they tend to be quite a fantastic platform from which a number of startups come about. So as students leave our more structured academic settings into this unknown world that's just startups and investing and all, what kind of recommendation would you have for them in order to kind of increase the odds for success? How do they parlay the outcome of a research or a project that they do while in academia into a successful startup, and especially as they grow their team?
Yeah, this is a very good question. And, one of the reasons I started Pear was actually, that's my personal mission, is to help students or people that recently graduated become great CEOs. And I think everybody that is in this seminar is capable of doing that. So, and my own fund, 50% of our portfolio is actually student companies, which is a large number, but many of them are very successful. As you point out, we had DoorDash actually came from a class at Stanford, for example. We have many, which is crazy if you think about it, but we have many of these companies. And I think, the common thread for all of these founders is that they realize that they constantly have to be learning. Like, you're not done. A company with 2 people, a company with 10, with 100, with 1,000, it's just very, very different. And if you want to be the CEO of this company, you have to grow with the company. So my advice in general for all my founders is you have to invest in yourself if you want to really stay ahead, right? And sometimes it's as simple as reading. If you read a lot, you're going to be prepared for what comes to you. Obviously, you go the next step, which is surround yourself by people that can help you get to the next step. Hire people that are better than you. You have to be very honest and look at what you have and you don't have, right? And what can I learn? What can I delegate? Don't be afraid to bring people that are, like I said, a step above, because that's what makes the company better. But in general, that's what I tell my founders, that it takes effort to become a great CEO. People are not naturally born great CEOs. It takes effort. It's not true that people don't invest in themselves and really become great leaders. So that's what I would say to folks. And then confidence. You have to have the confidence that you can do it, right? Which is really important.
Well, given the fact that you invest in kind of a pretty much very early stage of a company, life, seed stage and early stage, what do you look for as you're doing due diligence on anyone pitching to Pear, especially again those students coming out of academia?
Yeah, when we invest is very early. Typically, there is no product, there is no customers. So, there's a team. Sometimes there's not even a team. There's a person, but it's very little. And I get this question all the time: how do you choose a founder? Right? It's really hard. I tell people, well, how do you choose your spouse? It's actually a really hard question to answer, but you kind of know when you have the right match for your firm. My partner says it's like picking a good wine. It's hard to describe, but if you've tasted a good wine, And I think we have at least that bar. We've worked with really great founders, so we have a sense of what makes it. There's a lot written on the subject. Basic characteristics of a good leader is what applies to being a good founder. Somebody with clarity of mind, ambitious, resilient, that can lead, etc. I particularly look for a couple of things. One, I know that the companies pivot. Many of my companies will pivot into something else, but I'm still looking for, does the founder understand the market that they're playing in, and can they explain why what they're working on will result in a big company? And this is very subtle. The two people with the same idea, they can speak about the market very, very differently. But that's what I'm looking for. How sophisticated are you in understanding the place of what you're building in the market? And it could be that your hypotheses are wrong and the first product is actually not right. But if you're capable of understanding where it fits in, you're probably going to be able to pivot into something or that also makes sense or has a chance. And I'm going in many times thinking it may not work, right? I'm going in many times that way. So that's one thing. The other thing that is really good to see is somebody that, is action driven. Basically, they get stuff done, right? And, even if you have nothing, even I teach a class at Stanford, 50% of the students are MBAs, and I will tell them, okay, you can get a lot of stuff done. You're an MBA student. There's all this low code or barely code apps that you can use to build something. And you don't even need to write code if you want to validate some of your ideas, right? So I think the idea of running experiments, talking to potential customers, users, etc., even before raising a single dollar, right? It actually gives me the confidence that the person really has checked something before they want to commit 10 years of their life to doing something. So that's another thing I'm looking for. What sort of validation do they have? And that gives me a sense of how much they will they get stuff done rather than waiting for things to happen.
Well, certainly investing in early stage or seed stage is a combination of art and science.
Yes.
And that art part is certainly the hardest. But let me switch gears for just one moment and now look at the world from a venture capital, as a venture capital perspective, because you're also, as you mentioned, a co-founder of the firm. And now there is, a lot of money chasing seed stage, early stage ideas. And, the number of seed stage, early stage funds have grown significantly, especially now that we're going through some sort of market correction or market spasms, depending how you want to define it. So how do you stand out from the competition, given the fact there might be fear of missing out on the next big deal, and the fact that some people may not be as analytical in terms of approaching early stage investing? They realize we have everything has become like an option play. So let me just invest in as many as I want, and something's going to work out. So how do you keep your discipline intact given the market dynamics?
Yeah, that's also a good question. When we started Pear, it was, like I said, more of a missionary company. Like, I want to build something that is not just for my partner and I to, do a couple of funds, make money and close house, right? We really wanted to build the best platform for somebody that wants to, it could be a student or first-time founder. They want to start a company. We should be able to give them what they need, right? So over the last, 9 years, I've worked with many companies, and I have a good sense of what companies need. So if you let's assume you're 2 people, you get $1 million. What's the first thing you need? The first thing you need is you're going to need to hire a couple of engineers. you maybe another type of person, but majority of companies want a couple of engineers. Then they build a product, and the next thing they want is customers. Customers are very important. So getting introductions to customers is very important. And assuming they get customers, then the next thing they want is the next financing, right? So I think of us as like, what is the best product we can offer to a founder that wants to raise money from us? So if we can get somebody, their first two engineers, their first 10 introductions to customers, and their 20 Series A investor introductions, or close that deal, that's a great product. And that's what we're set to build. So we just hired, we actually we call them squads, kind of a special operation forces teams within Pear, but we brought in the head of global talent of Instacart, and we're bringing in a bunch of recruiters under him. So anybody in the portfolio will get a couple of engineers, 2 to 3 engineers for free, no cost, right? Which is a big offering if you think about what do you need at the very beginning, right, of a company. Is that same with the growth side customers. We have a go-to-market squad, and that's the idea. We'll get you all those introductions, and the fundraising, it's all the same idea, and it's already in practice. So again, I'm thinking, if you're a 0-stage company, what can I get you so that you can succeed? And that's what we want to build at Pear. And yes, there's a lot of money, but we don't see ourselves as just investors. We're really company builders at the end of the day. We are really building, I call myself a whiteboard VC rather than a spreadsheet VC, because I'm on the board all the time, iterating on product or strategy with my companies. That's what we do. And then, use our squads to make sure we deliver the tactical value at the end of the day. So, to your initial question, how you differentiate us, I think by having a better product at the end of the day, right? And I want people to say, I want to go to Pear because it maximizes my chances of being successful at the end of the day.
Now, speaking of the firm, Pear itself, one would have thought, both of you and your partner, having had, been successful entrepreneurs and invested in prior companies, raising money would have been very easy, but that was not the case. So can you talk to us about the similarities and differences of raising money for certainly a startup versus a fund? And especially for those students interested in, pursuing careers in venture capital, looking forward 5, 7, 10 years out, what advice would you have? What are the things they need to look for if they're trying to get in, number one, and also having a successful career at a firm that's supportive and growing and in interesting areas?
Okay, so I think maybe there's 2 questions. One is, how's the fundraising process different? And the other one, perhaps for people in the audience that want to go into venture, how do you go about it and how do you build your career? So I can start with the first one. Fundraising or raising money, no matter who is raising the money, is a sales job, right? You're selling yourself, you're selling shares in your company, but you're selling something to somebody. So you need to understand who you're selling to, right? The venture people have a certain set of requirements, right? If you want to raise money from venture folks, you need to understand that you're going to need to show a big enough company. If you're talking to, even 10 different venture partners have slightly different things they look for, right? So it's your job before those meetings to talk to founders that perhaps have worked with those people to try to understand how you need to sell yourself better, right? It's what a good salesperson would do if they're selling software or whatever they're selling. So that's that. Same for when you're raising a fund. When we raise a fund in venture, we raise money from people that have like endowments or foundations or pension funds, people that have big pools of money that they need to allocate, and part of their asset class is venture. So you need to understand, okay, what is in their portfolio? Do they need this type of asset, et cetera? And then you need to show them that you are the best manager for that asset that they need as part of their portfolio allocation, right? And you need to explain why am I the best venture seed or pre-seed early stage fund that you should back rather than, I don't know, giving money to Sequoia. That's a hard question. So that's what it is. It's like in any sales job, whether you're raising money as a founder or as a GP like myself, it's a pipeline job, right? Or sales. You need to have a big pipeline and just accept rejection. That's just part of the job. It's, it's a numbers game, right? If you had infinite time and infinite pipeline, eventually somebody would say yes, because your chances are not zero, right? Look, obviously that's an extreme way to look at it, but you need a healthy pipeline. You need to learn from every interaction. So you have a meeting and somebody says no, you don't just get upset. You go back to that person and say, well, can you give me some feedback? It would really help me in my process, and I would really appreciate it. And typically people want to help you if you say that. So you learn with every interaction. So, you get better over time, et cetera. But that's that, right? Some of my companies may not be able to raise money, or they'll get 20 meetings and I'm like, it's not going to happen. And then it's, hopefully within 20 meetings, you can understand why. And then you have to go back to the drawing room. And if you want to get a good investor, fix what you hear from the market, right? But that's my job, to help people understand and translate that. Anyways, I can talk for a whole hour about fundraising because I love that topic, but you probably want to move on to the other point, which do you want to?
Well, actually, yes. Let me pause right there. I'm going to come back to the second question.
Okay.
It's interesting the way you put. You kind of describe dealing with rejection. I heard someone tell me that every no that you hear should actually make you happy, because that means you're getting closer and closer to the final.
Yes.
Unless you are very unlucky and you get but the biggest question that our students we get from students and everyone's kind of grappling with is indeed this notion that you brought up. When do you know if with any certainty that you're totally off, that the idea that you're pursuing or the venture you're pursuing, it's just not going to work? Because apparently, obviously there's no rule. You look at
no rule.
There are companies that we know that despite all the rejection, they persevered and eventually succeeded. The example I mentioned in our prior events, certainly being Airbnb, they launched 4 times, right? But then there are countless examples of people who kept persevering, and they got unlucky. Market changed on them, certain externalities, macro events, and they was hard to look back, say, oh my goodness, I spent number of years on this and I'm still nowhere. So how do you know where to stop? Any heuristics you can share, any war stories you feel like can help students build a mental model to be able to guide them in the decision making, when to stop or where to continue persevere?
Well, that's a really good question. And I think, I make a lot of mistakes, I should say, and pass on things that turn out to be great. So just so you know, we look like we never make mistakes, but we make a lot of mistakes, like everybody, because that's a really hard question. Many things can change. Sometimes, it's a much harder decision. It's a much harder to rationalize the no's at the seed level when there's nothing, there's no numbers, there's nothing at all, right? It's much harder because, yes, Airbnb had a hard time raising because the idea was so crazy, right? That most people would say, you're going to rent my sofa in my house. I mean, that was crazy, right? Actually, my own partner passed on Airbnb because that sounded completely insane. So, at that point, this is one category of passes. Like, your idea is so crazy that most people will say will never happen, right? So then you yourself as a founder, and those guys at Airbnb had done that. They had rented their sofa and it was actually really busy, right? The business was working, right? So not at the scale it is obviously today, but it was, they had proof, they had validation. So you as a founder have to know that. Am I totally crazy? Or do I really see something that these other folks don't see, right? And those are the classic stories of everybody was wrong, but the founder's right, because VCs, we can't dream with the founder, right? So that's one type of company. There's another type of company that is, you're solving a problem, it's true, it's a real problem, but the market is very, very small. And you don't get funding from the big firms because you cannot explain how this is a big market. If you get that type of rejection, then typically the venture folks are good at analyzing markets, at least the top people. So you should really take a close look. Am I really making up the numbers? Because everybody that comes to see me will have a slide that says number of customers times how much they pay equals at least $3 billion, right? And my job is to figure out, is there really that many customers? Are they going to pay that much? That's what I have to get comfortable with. But you should be comfortable yourself, right? If you are comfortable and you're not making up those numbers and the VCs are telling you you're crazy, but you have your own proof that it's actually true, then I would say keep going, right? But many times the founders make up those numbers, or they're telling themselves that I could actually get there. So that's where, it's a little, subtle, I guess. When do you say yes or no? There's another type of company that people say no, which is more rare, which is, hey, it's impossible to build this. It's just not possible. The VC will say, it will take forever. It's not going to happen, whatever. And again, you are the founder. So you have to take that feedback into account. Is it possible or is it not possible? Have I ever shipped a product and am I being too optimistic? Have I talked to the right people that I need to ship that product? Whatever it is, right? You guys need to figure it out. At a series, this is all the seed companies. At a series A or B or C, the farther along companies, the passes are more based on the type of business you have, right? Are your margins, are your unit economics good? And then, we're always, there's always, again, a gray area, because most companies at a series A or a series B have not completely figured it out. So the investor says, okay, you're going in the right direction. And I think with a little more money, you'll be able to show me that your margins get X better, right? That's what we're betting on. Sometimes we're right, sometimes we're wrong. And same for the founder. Sometimes they're right, sometimes they're wrong. But that's what we're judging at those. And I'm not that type of investor, but that's what they're judging at that point. So it's much more rational, not irrational.
I see.
Or creative.
Yeah. I'm totally with you on that. And I didn't know that Pejman passed on Airbnb. One day I'll ask him about his, views and memories. I'm sure they're not pleasant, but I suggest to the participants to check out a blog post by Fred Wilson, which is an email exchange between him and Paul Ingram on Paul asking Fred to invest in or meet with the Airbnb team, and they go back and forth, and Fred eventually doesn't invest. But it's interesting to go back in time and read, and to your point, understand that we never have all the answers anyway.
So, yeah, you never do. Or Mark Andreessen passing on Uber because taxis. I mean, again, you just don't know. So.
Yeah, typically, all the dodges that two things keep venture capitalists up at night. One of them is errors of omission and errors of commission, missing on a great deal or investing in something that doesn't turn out to be good at all.
Well, the first one is much worse.
Yeah, exactly. Feels one worse. I'm totally with you on that. But let me go back to the other question I asked you, and then a follow-up based on a question by our audience members. So now that you're looking, into the future, what domains within venture capital investing interests you, excites you? Where do you think the opportunities are going to come from? And again, for students wanting to join venture funds, investing, what advice would you have? What they should look for to hopefully join a successful firm?
Yeah, let me tell you a little bit about the career in venture. We actually are lucky to have a lot of younger people, and we are hiring. So, if you're there, and looking for venture jobs, you can email me. There's a lot of venture firms, and it's not just stage, but size and type and so on. This is not like a standard software engineering job somewhere, right? So I think you need to spend a lot of time understanding the culture of the firm you're going into, because they're typically small organizations. I mean, there's some that are big, but the biggest ones are maybe hundreds of people, a few hundred people, right? So still small, relatively speaking. You're not going to Goldman Sachs, right, to work. You're going to a small place. And that has disadvantages, and it's, disadvantages. You really have to fit into that culture. So I think that's really important when you make the decision as to which firm you go to. And the second is, what type of venture do you want to do? Seed investing is I think, like you mentioned, it's half art and half science. There's a lot of creativity. There's a lot of error rates, on both sides. I miss that, and I can't sleep because I let a 10 billion company go one day, or I invested in, a bunch of companies that ended up going nowhere. So you have to feel very okay with that type of investing, right? It's not the usual thing we're used to as humans. If you said, hey, out of 10, I only want one that returns 1,000x, are you going to be okay? It's hard. On the other hand, if you're doing growth, everything is expected to have at least a 3x return, right? Not a lot of zeros. You cannot afford a lot of zeros there. So it's a different type, and you're not so much judging what could this be if everything that is not available goes right, but you're really looking at how did they execute in the last 3-4 years? What does the business look like? What is the market? What is the macro? How long until they go public, and what will the world be then? You're answering other type of questions. So they're really very different types of investing. So you have to figure out which one do you want to be a part of, right? I can talk a lot about seed because that's what we do. So that's, I think, what I'll do. Our team is very collaborative. So we have, and we don't have the usual venture structure where there's a bunch of partners, everybody's kind of on their own, and you meet once a week and you say, this is what I'm doing, this is what I'm seeing, etc. We are all really almost talking all the time, and there's no attribution, etc. So it's very different from a traditional firm. But in a way to be successful in our firm, and I think in many other firms, seed firms, would be to add value to the firm, which is, can you bring great companies to the firm that eventually return the fund, right? I think that's really what matters at the end of the day. Did you find one of those amazing companies? And not only did you find them, but once you found them, did you help them get to the next step so that they can be, you can add value? And again, going back to, we're not just investors. We actually take a company knowing that we have to work on it to get it to the next level. And that's how you grow really fast within a firm, especially if it's small, if you can add value in those two places, at least in our firm, right? If people have questions about how to get into a firm, also happy to answer them. If you go to a bigger firm, it's more structured. You might be an associate or a principal that works for a specific partner. So then I think the rules of the game, while the same, bring good deals, help the companies do the work that the partner wants you to do, et cetera. It's more structured than if you go to a place like Pear or a smaller firm where, it's like a startup. There's always more to do, and, easier to come up, but also crazier, more chaos.
I'll come back to this, your offer to provide some tactical advice on, how to get in. But before, let me ask you kind of a follow-up to the question I just asked, and that is, we experienced more than a decade of a bull market in venture in general, and the returns have been phenomenal. But recent macro events change the dynamics. So how do you see this impact of all that's going on, both in terms of coming after the pandemic and the global issues happening and all that? So how do you see that affecting trends in venture capital investing?
Yeah. Okay. I have to say, because I'm at the very early stages, macro stuff affects my new investments very little compared to somebody that is doing growth investing. It does affect my later stage companies in the portfolio. So, I think what's going on right now is that all the companies that were about to go public or in, unicorn state are getting their valuation slashed, or they will have to, and the reason was because people were valuing them for the last year on just one axis, how fast were they growing? And they weren't looking necessarily at what was your unit economics, what was your contribution margin. That was almost like a secondary observation for most people. So many companies would be valued at 100x ARR or even higher in some cases. And now those multiples are down. So most companies that were valued at, say, several $billion in 2021, today are probably worth half. That's the reality. If you have enough money in the bank and you can keep growing and keep generating value, by the next time you need money, you might have been able to grow into your original valuation, right? It's possible that you will not be able to grow into that original, previous or last valuation. And if not, many things could happen. One is you can do a down round, which is really, really bad for anybody at the company. You get really diluted because investors have anti-dilution protections, et cetera, or so on. Same if you're going IPO, if you go at a lower value. So that's not good. Or it could be even worse. You actually run out of money and you have to shut down the company. It's already happening. A bunch of folks are doing layoffs and adjusting so that they can get to that. They can survive if they've done a high valuation. So that's one thing. And I think anybody that has companies at later stage is actually trying to deal with that. So a lot of folks have cooled down their investments in growth in all the way through Series A. TechCrunch had a little analysis a couple of weeks ago on valuations, A, B, C, D, and how they've come down. And the closer you go to IPO, the larger the percentage drop in your kind of mean valuation. And at DA is the lowest, okay? Now, seed, what's happening at seed? You would say, well, seed must be the same. And it actually hasn't gotten to us yet. So as I'm talking here is March 31st of 2022. I don't know what will happen in 3 months, but as of today, there's still a lot of money in seed, and we haven't seen the valuations dramatically change yet. It's a little softer, meaning it doesn't keep going crazy, but the valuations still haven't dropped. I expect that they will, but it's unclear because there's so much money. That was your initial question. There's so many funds and there's so much money that there's a big delay. It's almost like this fake market that has a delay, right? If there's all these GPs with a bunch of money, they want to deploy it and go raise their next fund, right? So there's this pent up demand for companies still in the market, and until you cannot raise the next round, the next fund, seed fund, there'll be enough people investing money at seed. So anyways, that's what's going on. Yeah, I don't know how the world could get much worse in the next few weeks because it's actually pretty bad.
Let's not jinx it any further than what it is.
Yes, I don't know.
But as a follow-up, do you think some correction was warranted, both on the valuation on the startup and also the fact that, we keep saying this, there have been a number of venture funds that truly didn't have any competitive edge to them except just throwing money at inflated valuations.
It's yes, and it's part of the cycles, right? This happened also in the .com.
That's right.
All these people coming in, and at the end tail. So maybe that's a sign when you start having like the tourists coming to invest in companies and throwing money at crazy valuation. You know that the end is near. But this happens. It's just part of the cycle. It's just human, the cycle of boom and bust. So,
but you brought up a really interesting heuristics for students to use, that those who are interested in venture, but perhaps they, given the fact that there aren't that many open jobs in venture capital, they might want to pursue jobs at the startup firms. To look at, this reduction in valuation might be in their favor because you're joining in now, and then obviously, options or equity participation more favorable.
Absolutely, and a lot of companies are repricing their options because if they don't reprice their options, they can't retain talent, right?
But also, but you said something interesting for students to pay attention to, and that is, look how much runway the company has left, how much funding they have, or when they did their funding, and that should be a kind of a good indication how long they can survive without having to take drastic measures.
Yes.
Excellent. So let me talk about markets, specific areas that Pear invests in, or also areas that you are most bullish on when it comes to growth and potential for outsized returns or risk-adjusted returns.
Yeah, well, we have a big investment we're a small firm, but we have a big investment team, many partners looking at different areas. We've lately been doing a lot of Web3 investments just because students actually are doing a lot of Web3. So, my class this year, the first time we had Web3 companies, but we had, I think, a third of the students applied with Web3 companies. So, we've been doing it since last year, since early 21, but we're doing more and more because demand from founders is there. So more people in my team are involved in that. That's one. The second area, I love consumer companies. So, because I think consumer companies are the craziest in venture. Most of them will go to zero. It's really, really hard. But when you hit a winner, it's like a super winner. So I think it's the ultimate venture company. And I like consumer in general. I think, I've been spending, too much time in the metaverse. Maybe that's not good, but it's interesting. It's interesting. Anyway, so that's one. That's two. We do a lot of what I call tech bio companies. So we've actually had a few IPOs there, and these are companies that are using AI and data science to really, develop new diagnostic tests or therapies, et cetera. So I've been, we just brought in a partner to actually lead that for real. And I'm very excited about that. We also have a partner doing a lot of dev tools and cloud data computing, et cetera. So we also heavy investment in that from part of Pear. Anyways, many things, I would say. We do almost everything, I think.
Well, as the founding executive director of our Fintech initiative at Columbia, I'll be remiss if I don't ask you about your views on Fintech in general. Obviously, you mentioned Web 3.0, and blockchain crypto is one of our areas of focus. But obviously, in addition to that, machine learning, AI, and data analytics in general. But what are your views in Fintech overall?
Well, Fintech has been one of the, you probably know then, the hottest sectors of venture in 2021. I think if you said you had a Fintech startup, you just, I don't know, had money following you home or something. So, I think that's also been overpriced, and we'll see what happens there. I don't necessarily, I would like, even though I said I like consumer companies, I think consumer Fintech companies are probably the hardest. If you have just a new marketing idea on how to get somebody a new card or a new something, it's a difficult company to build, and there are many of them, right? That's very, very difficult. I prefer investing. We prefer infrastructure or embedded Fintech or something that is, less, marketing dependent for putting it in a real world. A lot of the Web3 investments that we have are not necessarily Fintech investments, even though they're using Web3 technology. I think we do have a couple of companies that are doing invoicing and B2B payments on Web3, but most of them are not necessarily Fintech per se. I think, anyways, I can talk a lot about Fintech, about whether L1, L2, L3, I don't know, but there's a lot there to unravel. And we are tending to invest more now on just pure infrastructure, because it's very unclear where the top layer is going to be and what the adoption rate is going to be, et cetera.
Great.
That's hard. Go ahead.
Sorry, finish your thought.
No, that's it.
Okay, got it. Great. So let me go back to that tactical question you promised to share with students, and that is things they could do to improve their odds of getting into venture capital for career, for long-term career aspirations.
Yeah, I think, I hate the word find your superpower. So I don't know how to explain it though without using that. But, in venture, you're like a founder, you're selling yourself. And many of, we have a program for students called Pear Fellows, where we involve students, they work for us, we actually pay them. So, it's not a free internship or anything. But we teach them venture, and many of them, actually we have throughout the years, we counted, we have 37 of them that have ended up in venture, which is a huge number. Some of them general partners now and so on. And a lot of them, the advice I will give them is, okay, find what you're really good at and over-index that that, so maybe you are, Fintech really well, right? And okay, what can you do to show value to a new firm? And you say, hey, I'm Robert. I have this blog, let's say, on Fintech that has 10,000 followers. And by the way, I get all these deals because people just like what I write every day. And I could come to your firm and immediately be valuable. And somebody is going to look at it and say, oh, well, Robert seems to be a really valuable asset for our firm, even if you've never done investing before or, anything. It doesn't matter. You're bringing some value to to that fund, right? So that's one way. Sometimes people, and we've had Pear fellows do that. I had one of our earliest ones. This is when AI was a big deal. That it's not today, but a big deal. He started writing a newsletter where he interviewed different people on AI topics. And the newsletter was really big. So then he started doing this in-person meetups in San Francisco. And I think when he graduated, he had multiple offers to join venture firms because he had something to add to the party, right? At the end of the day. Some people also get into venture, because they're operators and they have a small angel portfolio. You can have a small angel portfolio. If you are graduating from the Columbia Business School, you will probably have a job when you finish that pays you enough. So you can take maybe 10% of that budget and invest it in companies, depending on what your personal situation is, but you could build a little portfolio over time. And it's really valuable if you can go to a firm and say, by the way, you don't have, I've been looking at companies for the last year in New York or in Columbia, and I've actually backed these 3 people. Let me tell you what I've done for them. That shows a lot of value to somebody when you want to try to get a job, right? If you want to get a job at a bigger firm or more, many firms are hiring, right? Then, just being reasonably smart, capable, and understanding of markets, et cetera, is the minimum you want to get it. You want to have, right? Because you want to pass that interview, and you want to show that you can add value when a deal comes in, or when you're discussing what the strategy is for whatever vertical that you're going after, et cetera. But a lot of it is your own. You can do a lot, even if you're not in venture, to prove that you could be a good investor. And I think my favorite one is Harry Stebbings. I don't know if people know Harry Stebbings. He runs this podcast called the 20-Minute VC. And he started when he was 21. He has his own fund now because he built such a network, right, of people that, he had enough deal flow to actually become its own entity, right? So again, that's an extreme, but, anybody today, that's the beauty of media that we have today, could do it.
I really appreciate you sharing these stories and these, tactical matters, because I always say long gone are the days you could just send a resume and expect a response. The burden is on you to really differentiate yourself and really prove that you can provide value from the get-go. And that creativity, I think, goes a long way. The stories, obviously, if you were to replicate something that someone else had done in the past, I don't think that's going to be enough, but you can add your own twist to it and find that special angle. And to your very important point, play to your own strength. That's where,
My own partner, Pejman, which I don't think you may know his story, but he has an incredible story. My partner was initially selling rugs at a rug store in Palo Alto. And, today he's in the Midas list. So you're like, how can a guy in a rug store become a great investor? It's a crazy thought, right? But, he said, well, what do I know? I'm a Persian guy. I have a lot of Persian connections. I'm going to be the best person at finding Persian founders. That's his mission. It's a very thin sliver of the market, right? Persian founders. But it's enough to own that if there is enough good ones, right? To go on and start companies. So again, look at yourself. What is me? What do I care about? Who am I? What are my networks? Like, where could I be a really good investor? That's the question.
Well, along those lines, Mar, let me ask you this other question. And, someone like you who's truly a global person, born overseas, immigrant to the US, studied in the US, working here. to what extent do you feel that the power of geography today still matters? If you were, if Pejman was in New York, could he have had the opportunities in developing the network as opposed to in Silicon Valley? Or now, especially, nowadays with the world being global, does geography still matters? Especially for students being in New York, us being in New York, looking with envy from time to time to what's all happening in Valley. And where do you think our strength should be, us being East Coast based?
Yeah, that's a good question. I think the difference was much higher, much bigger, 25 years ago, for sure. I think the Valley and anywhere else was like, just so different, right? It's still different, right? Because I think here, and this is one of the things, everybody around you is in tech. Everybody around you is in a startup or, a service provider to a startup. My neighbor, my parents in my school, the guy next to me at the Starbucks, they're just, everybody's in tech. So, the network is really dense. I tell the story that when you walk into a Starbucks here, people are sharing their pitches for their companies. When you go to LA, they're looking at movie scripts, right? It's just the different, it's just what this place is made of. So if you want to find a lawyer, you probably just ask a random person around you, and they're going to tell you, oh yeah, I have this good person or this good girl that I use for my corporate thing, right? And I think that's harder in New York. If you pick a random person in a Starbucks, they probably will tell you, I don't know what corporate law is for startups, right? So you have that disadvantage if you're not in the Valley, that the network it takes a little more effort to achieve the same type of thing, right? It's not impossible, obviously not. Look at all these companies right now, and not just New York. I think New York I think it's changed a lot in the last 10 years, I would say, for the good if you're a founder, but also Europe, London. I mean, a lot of the firms are going there, opening offices there because it's actually really good. LATAM, we have a lot of investments in LATAM, and it's a different kind of network, but it's also, it wouldn't have happened 25 years ago. So it's getting better and the world is closer. Hopefully we'll still be closer after this war. So that's the good news. What advice? I mean, I think just have to be ready. Again, play to your strengths, right? What's good in New York? And I'm not in New York, so I'm speaking a little bit out of context. I should ask you, what are you guys good at? But I think fintech is one of them, right? I think people that are more comfortable and better fintech companies start there. I remember talking to the Carta CEO. He came to our class once, and nobody gave him money in the Valley. But when he went to New York, I think people understood him, and he was able to raise money pretty quickly, right? This was years ago, but I think that probably still happens, even if fintech is big here in the Valley now. Or if you're doing consumer NFTs or something like that, maybe LA is a better place because there's more of those folks around you, right? And, it's not that far to go to the Valley. So anyways, that's the advice I would give you, and just be ready to work a little harder than if you were here.
I'm glad to report our students, what they certainly don't lack is the desire to work hard, and they're all quite accomplished. So hopefully you can give them a little bit more, even more fuel. I'm
sure they're awesome. I'm sure they're awesome.
Thank you for that. Now, the other question, Mara, I wanted to ask you, as an immigrant, as a woman, as a Latina, you kind of have been incredibly successful, where typically minorities had a hard time breaking in. Obviously, we have come a long way, but we still have a much longer way to go to achieve any sort of parity, at least when it comes to women in venture and technology and all. So what advice would you share with our students, especially underrepresented minorities and women, the things that you feel like they need to be aware of as they're trying to, rise through the ranks and be successful and deal with some unintended or perhaps even intended discrimination they might face purely based on, who they are, country they're coming from, and the like?
Well, I would say, yes, it is harder if you're a woman or an underrepresented minority, if you don't look the part, but it doesn't mean you can't do it, right? It's just go in thinking, again, I'm going to need to work a little harder, but now I know you got to work hard, so that's okay. I've always had to prepare a little more than the guy next to me, know a little more, so people, would take me more seriously. And even then, even today, it's not, if I'm in a board meeting and I'm the only woman, sometimes, I have stories as recent as, the last couple of years where I'm like, they wouldn't tell me that if I if I wasn't a woman, but I'm okay. I'm like, okay, I know this person is probably just at capacity, so I'm gonna have to try to overcome this. And that's my mentality. It's not that I'm going in knowing that I have to do a little more, and it's okay, right? One of the things I've done that has really helped me in venture is I've built a super strong network of women. I actually run this conference called the Equity Summit, where we bring women GPs and LPs and together, and the idea is, can we route more LP money into female and underrepresented minorities GPs? And just by putting that conference together, I built this amazing network of GPs, and there's a little bit of a camaraderie, so we can share deals, we can ask ourselves about companies. It's really great. So I think, again, play to your strengths. I actually think being a woman has really helped me in that sense. I have a much better network and can get answers in many ways faster than my partner Pejman, because I have this amazing network of women. So it's very valuable. And you could be Persian like he was, or you could be whatever. It doesn't matter. You can, again, play to that strength. And if somebody puts you down or doesn't take you seriously because you are in a certain category, my take has always not to be upset, but to be, okay, I'm going to show you. And that's my attitude. Doesn't mean it has to be yours, but that's been my attitude.
Well, amongst many of your admirable qualities, one of the ones I have always appreciated the most is your can-do attitude. So to me, that speaks volume to your strength and certainly inspiration, not just to me, but everyone who knows you. So as you're approaching the top of the hour, a couple of rapid fire questions just to make sure I can ask all the things I wanted to ask you. Do you have any advice for early stage entrepreneurs in how to build a network in the venture capital space? This is an audience question.
Yes. My partner Pejman gave me this advice early on, and you have to give something to people before you ask something for people, right? So when you meet somebody, just anybody, founder, VC, PM at some company, doesn't matter. I'm always thinking, what could I do for this person to make their life a little better, right? And I don't expect anything in return, but I know that if I do that enough times, something will come back. And that's how I've built my own network, and my own deal flow many times just comes from things like that. And you feel good, right? If you actually are doing good things for people and helping people, you feel good at the end of the day, even if nothing comes back. So that would be my advice to everybody. Be, a good node in the network.
And Mar, lastly, can you share with us some of your habits that serve you well? And especially when it comes to reading, what are the things that you read religiously that you feel like it should be on our students' radars?
Okay, I wake up really early. I wake up at 4:30 every morning, and I make my coffee, which is very important. And then from 4:45 to 6, I will do the hardest thing I have to do that day. So it's I used to be almost like a procrastinator, and years ago I changed that. And now I do the thing that I hate the most, the first thing in the day, and then I exercise. So by the time it's 7 a.m., I've already done the two things I hate the most: exercise and whatever was hardest. So I feel really accomplished and very optimistic for the rest of the day. So that's my long learned skill throughout many years, and I think it works. And reading, I'm in venture, so we need to keep up with what's going on. So I'll read, I read strictly VC, I read The Information, and I read Axios pretty much every day. And then at the end of the day, before I go to bed, I watch Jimmy Kimmel. and I may feel good, even if the world is about to implode. I feel really good before I go to bed, so I have a good night's sleep.
If you watch him live, that means you go to bed late. So I'm amazed how much you can get
Not in the West Coast, not in the West.
Oh, that's right. Actually, that's right. I forgot about that. All right. On that high note, Mar, as always, much appreciate the time you have generously given to us. I certainly look forward to the day we could host you in person and welcome you to Colombia and give you a tour of our beautiful campus.
That's awesome.
Thanks to everyone and all the attendees, and stay tuned for our, with more information once we announce our fall 2022 programming. With that, I wish you all a great evening and fantastic end of a semester. Good luck to everyone, and thank you. Bye.